Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. It's generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive in there, take a look, see what's going on. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, where I dive deeper into all of these subjects, looking for potential investment opportunities and sharing them with everyone in the community. If you want to join, we've got a coupon code special going on, SPECIAL. You can see the discounts in the description link below. So David, silver will melt faces soon, and what he's looking at is the yearly candlesticks, the 12-month candlesticks. And we've got a big move up, cup, handle, and we're breaking out of that handle on the yearly candlesticks. So we're starting the launch in silver. I think it's going to go up for a very long time. Silver went up from 1940s all the way to 1980. It was a 40-year bull market back the peak here of 1980. If you go all the way back, it started in the early 1940s. So I think this is exactly where we're at. We're probably early 1940s, breaking out of the consolidation um, and going into a very long bull market for gold, silver, platinum, probably palladium as well, anything that's hard assets. And there's other things that I look at. Obviously, you're part of the website. I don't want to share everything on the normal YouTube channel, but you guys know the secret behind what I think is driving silver. HFI research, natural gas storage is headed for the 2022 lows. Colder than normal weather outlook into mid-March is upending the natural gas fundamental story, with EOS projected at 1.52 trillion cubic feet. This will keep natural gas storage levels close to the 2022 level. Meanwhile, the structural demand increase from LNG at the end of 2025 will give bulls another leg up. Never ever forget the handoff. Team Biden juiced fiscal spending in Q1 2025 with close to an $800 billion just one quarter deficit on the way out the door. Taming this inflation beast will not be easy. And you can see the M2 money supply rolling higher here. And I don't know if that's from government spending. I don't know if the Federal Reserve is printing more money for something that they're doing. I know the reverse repo was getting quite drained. So, yeah, that's what's going on there with the M2 money supply. Huge move higher here from the 2020 event. Drill Baby Drill, oil field service company Schlumberger reorganizes, expects more job cuts. Sounds like a real boom is going on in drilling right now. I'm so glad that we've got prices that are high enough to increase the rig count and increase production of oil. Now, here's another thing. Just because the rig count goes up does not mean that oil production goes up. Oil is a function of flow rates from reserves. So you can have certain reserves which are very easy to flow. There's other types of reserves that are more difficult to flow. What we saw in 1970 is that we saw drilling increase dramatically on conventional oil in the 1970s in America. And guess what happened to oil production? It went down. We drilled more and produced less. That's called geological constraints. If we hit geological constraints, you will be able to drill more and you will have less supply. Nominally Rich says, what just happened to silver and gold within 10 minutes is disgusting. Silver lost 55 cents in 10 minutes. So this happened last night. I was looking at this too. We saw a huge move lower in silver, a big move lower at the same exact time in gold. We saw a big move lower in all of the precious metals. Even in oil, it exhibited it. Why? Why are we seeing that? How is it possible if all of these things are trading based off the fundamentals of each of these markets, why do they all dip at the same time? Maybe it's currency related stuff. Maybe there's something else behind it. Maybe they are trying to slow down the move of gold and silver. I think a lot of people, um, they kind of wonder if this stuff is being manipulated. I don't know if it is. A lot of this stuff always happens like right when the market opens or during off hours in the morning specifically. Now, if they're doing that, you should be excited and happy. Not that the price was getting pushed down, but the fact that they are fearful that this is going to get out of control. So we're on the right side of this thing. And if they are trying to hold it down, take advantage of it. Buy some more. Don't let it worry you. This is going to be a marathon. It's not a 100-meter sprint. We're not sprinting here. This is about it's about being the last person that's holding this stuff. It's not about trying to make as much money as possible in the short term. It's about preserving wealth and being the last person standing, playing the game of resiliency. Here's Sahara with platinum. Look at this thing poised at the break point. It's ready to break at any second here. We're all squeezed up. Platinum looks fantastic. Uh, there's other things that you can look at, like a platinum to gold ratio, and you could look at it from like the 1800s till today. That is probably the most convincing chart I've ever seen of probably any asset class ever. That chart, that ratio chart, dating back to the 1800s, going through Weimar Germany, the three hump consolidation, all of that stuff that I show you guys on the website, is the largest pattern that I've probably ever seen of anything. Silver's another big pattern, the big cup and handle that everybody looks at that started, it led into it in the 1970s up to 1980, created the cup and the handle. That's also a really big one, but in all honesty, that pales in comparison to how big the platinum ratio chart is. So this one's not a ratio chart. This is just priced in United States dollars. Something big, I think, is coming. I think platinum could be an excellent performer. I think silver and platinum could be the two best uh, investments, perhaps, of our lifetime, if you're looking at it from this point forward. I think energy will do really well too. I wouldn't buy tech stocks right now. I'd buy gold. This is the gold divided by NASDAQ, and it's starting to break its downtrend falling wedge to the upside. This is the beginning of the beginning. Now, did you buy the bottom on gold? You did not. If you buy it here, you're buying the bottom of the ratio, but not the bottom of gold. The bottom of gold, I mean, obviously that was 2000, the beginning there. You could say that it also bottomed in 2022. Gold did. That could have been the bottom of this new move. I think gold's going to go a long way. I mean, a long way. So this is a everyone is worried about the short-term market movements. They're worried about these little zigs and zags. This is every 3 months. Each candlestick's a 3-month candlestick. If you look out and you look like 10, 20, 30 years, I think gold's going to just explode higher and just keep going and going and going. What would drive that? I think resource constraints. I think I think we're at the top of abundancy, and I think we're at the bottom of scarcity. So if we go into a world of scarcity, I think the pricing of assets has to change. And what I mean by scarcity, I don't mean that things will necessarily go to some infinite price. I think some things will, and I think other things might not. So artificial intelligence, if it comes and let's just assume it's successful, I'm sure it can figure out things to keep people um, entertained, is what I'll say. But when we look at this and there's problems with resources, because artificial intelligence is just more or less a conversion of commodities using energy into usable products. And if we have resource constraints, like let's say copper or other resource constraints, I don't know how artificial intelligence will necessarily get around some of those constraints. There's things that we can do for sure to prolong everything. But if we do enter a world that's a little bit more resource constrained, we'll call it a more of a scarcity model versus an abundance model. We could see gold and silver and all of these things revalue against financial assets. And I think that's what's going to happen over the next 10, 20 years, looking at it from a bigger picture view. Here's copper. So copper, I like this, it's got the smiley face, but this is how I do technical analysis for the most part. Um, it doesn't have to be clean. It doesn't have to look good. That's why I'm sharing this one. It says the planet is ill prepared for the future shock of peak copper. The handle is half built, $6 a pound by April is the call. And this is just a move up and then the cup and the handle. Some people say it's a shoulder, head, shoulder. It doesn't really matter what it is. You have resistance here. It hit resistance, came on down, and then we hit resistance and we're going to break through that resistance. And then it's going to run. So it's a continuation pattern. It's going to go higher. It doesn't have to be perfect. And then you go look at the fundamentals of copper, and the fundamentals of copper are absolutely excellent. The fundamentals of projects coming online, inventory draws, the demand, it looks all sorts of jacked up in late 2020s. So yeah, copper is probably going to be a really good long-term investment for those that are looking. Howard Marks says, here's the key to understanding risk. It's largely a matter of opinion. And the reason he has that opinion, I've listened to Howard Marks, is that there's no real good way to measure risk. Even after something occurs, you had no way to measure it. They don't even know how to measure it after it occurs. So what is risk? What exactly is risk? And I always get a lot of questions, like, is company A more risky than company B? And then, my answer is, well, I mean, what risk are you looking at? Are you looking at the business risk? Are you looking at political risk? And then what type of statistical probability do you assign to each of these? And some of it is just based off of what your experiences are. So I had some Russian assets that basically went away because we went to war. And then those assets were just poof, gone. And that's a risk. Yes. But was I looking at that as being a risk? No. Now, did I understate that risk? I don't know. I think that could probably happen to any of my investments in any country. So then you have to say, well, what's the statistical probability of that occurring and how often has it occurred in history? And I mean, that's stuff that you have to look at. But I don't know, even if I applied that type of approach, if it would have done anything. So, I mean, it's largely a matter of opinion. So is there a good way to measure risk? Not really. I mean, one could state that if a company operates just period, you've got operational risk and then you've got jurisdictional risk if it's a commodity that can't be moved. Obviously, tankers can be moved and ships can be moved and stuff like that. But for the most part, if it's a mining or energy or whatever, you kind of can't do anything with it. So it's up to this jurisdiction. And then the question is, well, what's the riskier jurisdiction? I can't even tell you that. A risky jurisdiction, United States of America is pretty dang risky. Mexico's risky. Canada's risky. Namibia is risky in Africa. Australia's risky. So tell me which one's the lowest risk. I couldn't even tell you. I couldn't even tell you what the least risk is. If you're in America and you've got a development, well, when are they going to get their mining license? Never. Who knows? What about Canada? What about all these other countries? It's tough to know. Here's Jeremy. He says, you had $3.2 million and were forced to go all in one stock for the next 5 years. Which stock do you pick? All right, that's a stupid question, number one. I would never put all of my net worth into one stock. If I were to do it, I'd put it all into gold or silver or something on the lines of that. I wouldn't choose a stock. I wouldn't choose a company. I would choose an asset that protects me against inflation, that is something that you can't increase, and something that has history. So if I were to choose something, I would probably choose, if I had to, and I was forced to go all in on one thing, I would probably choose gold. Now, some people are going to be like, well, you just described Bitcoin. No, I did not. Bitcoin is garbage. Like, I did not describe that. Bitcoin is an intangible asset. It is not located on the periodic table. You know, it's not an element on the periodic table. It is easily replicated. It's incredibly wasteful. It has a whole bunch of crap that's wrong with its design. I don't like it at all. So to compare that, it's not a good comparison, in my opinion. TF Metals report. Well, what do we have here? Gold futures down $32 in 9 minutes. Boom, boom. That's that hit that I think people are trying to control. And guess what? This had the same chart in silver, the same chart in platinum. They did it across the board all at the same time. So they don't want this to get out of hand. They don't want gold to just run, run, run. They want a slow, controlled movement. Like they're going to try to they're going to try to control the price of precious metals as they go up. They don't want it to go unleashed to the upside. I don't think they can stop it. I think they can just slow it down. Mineko64 says these two charts should keep Scott Bessent very busy over the next 4 years or so. In Germany, the blow-off phase lasted 1 year, while in the United States, it could be 4 to 5 as the chart is a bigger fractal of the one from 1918 to 1923. So if you look at this as you go up, so look at this very closely, the fractal. The fractal is a pattern that repeats over and over. And what the pattern is, it's basically the extension of the herd. The herd is people interacting, creating a market. And it's the extension of the herd's psychology. So it's the interaction of all these people, which we call the herd, and it creates these patterns. If you look at the pattern of Weimar Germany in 2011, this is 1918, 1920, it dipped, came up, and it dipped again. That's your cup and your handle, and then the break of it. This here is your cup, and then your handle, and then the break of that handle in 2024, and we're going vertical goose. So I don't think they can stop this move. We are in the middle of a very powerful move. When you look at Elliott Wave, when you look at technical analysis like the cup and handle, when you look at all of these other measuring sticks, ratios, and comparisons of asset values compared to each other, and maybe even against the M2 money supply, what is occurring is that we are at the beginning of a shift of asset rotation. So when I talk about all those capital rotation events that Northstar and Patrick share, bad charts, this is it. We're at the beginning of that capital rotation event that happened in 2024. And what happens now is that hard assets are going to be the thing to grab onto. Money's going to rotate from financial assets to hard assets, and you're either going to be in them or you're going to get absolutely slaughtered. Why do I say that? If you're not in hard assets, the price of hard assets are going to go up vertically, and you're not going to be able to catch up. So I don't think people are going to be able to catch up with their income, so to speak. I don't think people are going to be able to make up the losses by not being in it. So the way that I view it is that there's going to be a large revaluation of assets against each other. Gold and silver and platinum and palladium and other hard assets, oil, it doesn't matter what it is. They're all going to get revalued as this money starts to rotate differently into the future. The thing that's going to cause this rotation has already occurred. It's the interest rates, say the 10-year yield, breaking its bottom from 2020 upward and then breaking the downtrend in 21, 22. So that's what's going to cause the money rotation. It's going to be interest rates. And it's already started. 2024 is the beginning of this start. The bottom of 2020 here, 2019, 2020, that was the bottom. So now it's a question of, well, how far does this thing go up? And how is money going to flow at this? Here's my guess. I think money's going to flow at gold, which it's doing right now. It's going to flow at silver next. And then platinum's going to do some ridiculous launch too. Silver's got that big cup and handle pattern that's all the way back to the 1980 and that consolidation. When these things start to break, money's going to flow at that stuff hard, and you're going to see big price movements. I don't know if there's going to be physical metals to just be sitting around. I mean, I'm sure there will be at some sort of ridiculous price, but I think the prices are going to get revalued way higher. So that revaluation, moving on up, is going to be substantial, I think. So gold's our leader. It's already broken out. Silver will go next. Platinum will go after. Energy will follow too. It's money coming into the system, and then when that money, gold is the liquidity measurement. It does it real time, and then the money coming into the system takes about 12 to 24 months to go through platinum and silver and energy and stuff like that. And this is where I think it will end up. It'll go vertical like this, and I think we're going to get oil at like $500 a barrel at the end of this big move. Sell Bitcoin, buy silver. Few understand this. I agree with that. And this is a play on the market conditions. Bitcoin's an extension of the Nasdaq, I think, and that we're peaking in intangible assets, and I think we're going to move towards physical assets, hard assets. And that's what this is the beginning of 2024. Understand this. Bitcoin was created to divert flows from gold and silver into literally nothing that would ever affect anything because the banks were massively short metals, not Bitcoin. This was planned. What was not planned was the crypto market cap becoming so large so quickly. The goal was to create an environment akin to a slow tire leak, and that was accomplished at first. Not one single risk manager even thought about a scenario where the market cap of crypto becomes so large that if money ever rotated out of crypto back into gold and silver, it would literally create the exact thing that the banks were attempting to avoid. So that very well could be the case, and I think they did create it to slow liquidity going into hard assets. But now, when that does rotate back over, that's where you're going to get that vertical move. It's the money rotation out of all this stuff and out of technology stocks too. The last week might be the most blatant stranglehold I have seen on silver in the last 10 years. They're trying to drown a shark. It won't end well. I think it's fantastic. I could go buy more physical metals for longer. I haven't really been doing that. I already bought a whole bunch, but I still would if I had the chance. Global abandonment of U.S. treasuries in real time. This is Chinese gold trading activity explodes. So China is getting on this gold train here. 2019, 2020 there, and then another one, huge spike of lots of gold demand. They're buying this stuff at the bottom here, guys. This is the beginning of a big move. Can I tell you a secret? So this is, again, about the intangible assets versus the hard assets. This is gold, XAU versus QQQ, the big tech. So underperformance, QQQ outperforming, QQQ outperforming, and look what we have, a breakout of gold XAU versus QQQ. What does that mean? It means a different market condition. If you draw a line across here, this is called a double bottom. Bottom one, bottom two, and we're going to break out and move higher in the inflation regime. So this is disinflation regime, inflation regime. So how do I know this is going to go up? Interest rates. Interest rates are telling us the same thing. When we get a decline in interest rates that started in the early 1980s, it declined all the way down, and we'll get a bottom here. It bottomed in 2020, and we're going to get a bottom here that's going to roll upward. This takes time. The first mover is going to be gold, and we're already seeing that rotation through the price of gold. Now everything else will follow. Even XAU, the gold and silver mining companies, will follow next. Razor oil, interesting, all things considered. There we are in February, and we're about to get going in crude oil's future seasonality, which is good. Steel prices up 10% since inauguration day, going to feed right into construction costs, automobile costs, and even energy costs. Most energy infrastructure is made with steel. Eric Yoon says, the more you learn, gold is so rare that the world produces more steel in 1 hour than it is mined gold throughout all of recorded history. You don't even want to know what platinum is. Platinum is a fraction of what gold is. So is palladium. These things are ultra rare. Since Lambert, or Lance Lambert, sorry, 38 is the new 28. It isn't just housing. So younger generations are delaying life events compared to previous generations, attending school longer, marrying later, buying homes later, and having children later, and fewer. So the median age of the first-time homebuyer is now 38, and we need to take that into consideration given the demographic stuff that we're seeing in the demographics. So if we look at demographics, and let's say the big peak in the demographics is like 31 years old right now, well, if the first-time homebuyer is 38, we probably still have another 7 years of very large home buying demand and family formations and all that stuff. And if families aren't being formed, you might even have greater demand, because that means that there's going to be more singles buying homes and or apartments or townhouses versus families. So your occupancy per structure goes down, perhaps. The manipulation of gold and silver is now breaking now. Is not breaking now. Been saying for a year that it broke 13 months ago when metals had their mega breakouts. The proof for this is when gold's character changed. Since then, we've had a runaway straight up move when broken free. The massive move gold has put in for the last year has been one of its strongest in history. And gold does not have one of the strongest moves it has had in history and then break the manipulation. That does not make any sense whatsoever. Furthermore, silver's move up the right side of a very large rounded bottom arc below looks very normal and strong. It is just stair-stepping up the right side of the rounded bottom arc. Same here, silver does not break out above a 13-year trend line and resume the bull market. In order to then pause at a very normal resistance at 32.77 in order to break the manipulation. That happened at the big 13-year breakout a year ago. Also, the fact that both metals broke out together above the 13-year trend line is further evidence that it was the moment when the manipulation was broken and ended. The synced breakout is an amazing event in technical terms. Gold and silver are today the only counterweight versus the global fiat monetary system. That is the reason metals were manipulated. And seen from that perspective, one would really expect the powers that be to manipulate the metals, which they have always done for decades on and off. This is because gold and silver rising hugely is a clear signal to the world that something is very wrong with the monetary system. It would really be a misconduct from their part not to try and hold the metals down with that backdrop. Still, though, with the present global fiat monetary system dying It should be obvious not to expect this precious metals bull to be easy. Expect it to be hard, very hard. And do not get disappointed. Emotional, understand it instead. Getting the best guidance will be critical for the most in order to be able to make good use of the bull market. And he's talking about silver breaking out here about a year ago and the breakout in gold ripping. He's saying the manipulation is basically dead. And they are trying to slow the moves down a little bit, I think, but I think they're going to fail. I don't think they can stop this move. So get ready. We're going to have a big move here in gold. Gold's already had the, it's already on its way. Silver's going to be next. It's going to move big. Bigly, bigly, bigly. North Star, I already went over that one, so that's where we're going to end it, guys. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Special is the coupon code. I have released a midweek update today, so you can view that on the website and gain my opinions on what I think looks good, what I'm doing, and kind of how I'm positioning for this bull market in commodities that we're in the beginning of. So that's all I've got for today, guys. We'll catch you next time. This is Finding Value.